Houston's real estate market is full of opportunity, new developments, rental growth, and commercial expansion everywhere you look. But here's the part investors rarely talk about: tax friction. Every year, Houston property owners lose thousands, not because of bad deals, but because of missed deductions, poor documentation, and delayed planning. According to the Texas Comptroller, property taxes are the single largest tax Texans pay. And for investors, those taxes can quietly drain your net operating income if you're not strategic. So in this video, we'll unpack how a real estate tax advisor in Houston helps eliminate deal friction, safeguard your after-tax cash, and turn unpredictable taxes into predictable returns. By the end, you'll understand exactly how to keep more of what you earn and avoid the costly mistakes that reduce your yield year after year. Let's begin. Why you need a real estate tax advisor in Houston. Owning property is one thing, managing tax complexity is another. A real estate tax advisor bridges that gap, connecting your financial modeling with tax reality. Every pro forma looks great on paper, but when depreciation, financing, and exit structures kick in, your after-tax results often look very different. A skilled advisor ensures your projections reflect reality, aligning your property tax assessments, depreciation schedules, and 1031 exchange timelines to avoid nasty surprises later. In Houston, this isn't optional. Between rising assessments, tight deadlines for appeals, and evolving federal rules, your returns depend on how well your tax strategy keeps up with your business plan. Moving on, where returns leak in Houston deals. Let's break down the 4 most common leaks Houston investors face and how to plug them. 1. Property tax drag on NOI. Assessments rise quietly every year. Many investors don't appeal them, and escrow estimates often lag behind, shrinking cash flow and disrupting loan covenants. The fix? Maintain a property tax calendar. Gather evidence packages for Harris County. Run pro formas that test assessed value scenarios, and coordinate escrow updates with your lender so payments match reality. 2. Depreciation. Left on the table. Too many owners use simple, straight-line depreciation. That's a missed opportunity. A cost segregation study breaks your property into components: lighting, flooring, HVAC, allowing faster write-offs and major year-one deductions. It also helps you plan recapture at sale, so you know your true after-tax return in advance. 3. 1031 exchange missteps. Missed deadlines are one of the biggest deal killers. Investors often fail to manage their 45-day and 180-day windows, or forget to balance cash and debt, resulting in taxable boot. A proactive advisor creates a replacement property pipeline, tracks deadlines in real time, and models scenarios: hold, exchange, or sell, so you make informed decisions, not rushed ones. 4. Structural and entity misalignment. Most investors set up one-size-fits-all LLCs without considering partner structures, hold periods, or financing terms. The result? Tax surprises and messy K-1 reporting. A Houston CPA firm reviews your entity setup annually, aligning it with your financing, waterfall distributions, and exit goals, ensuring everyone reports consistently and cash moves smoothly. Let's talk about documentation, the secret to smooth audits and faster loans. In real estate, documentation isn't paperwork, it's protection. Repairs versus improvements, missing travel logs, and unmapped invoices are red flags that stall underwriting and trigger IRS questions. A real estate tax advisor builds audit-ready books. That means monthly tie-outs, capitalization policies, and vendor coding standards lenders actually trust. When your documentation is consistent with filed returns, loans close faster, and audits resolve quickly. And the best part? You don't need to scramble at year-end, because every quarter is already reconciled and reviewed. Moving forward, quarterly planning and estimate control. Most investors think of taxes once a year. The best investors plan every quarter. Quarterly tax reviews allow you to adjust estimates, project cash impacts, and maintain compliance with your loan covenants. For example, property assessments jump mid-year or rental income spikes. Your advisor recalibrates your tax position in real time, preventing underpayment penalties or sudden cash squeezes in Q4. A Houston tax advisory firm ties your quarterly projections to your deal calendar, keeping your tax and transaction timelines synchronized. Services that transform results. Let's talk about about what a Houston tax advisory firm actually does beyond filing forms. Deal structuring and transaction planning. Before closing, advisors help allocate purchase price, trace interest, and document basis, creating lender-ready files that reduce questions later. Depreciation, optimization, and exit modeling. They create component-level schedules, plan safe harbor elections, and model depreciation recapture so you know your post-sale cash, not just your gross gain. Exchange and disposition playbooks, 1031 calendars, replacement criteria, and boot mitigation strategies give you side-by-side comparisons of your options: exchange now, reinvest, or sell and pay. This clarity turns tax law into a strategy tool. Let's zoom out. Why local expertise matters. Texas is unique. With no state income tax, property and franchise taxes do more of the heavy lifting, and the rules can vary by jurisdiction. A Houston-based CPA understands how to appeal assessments, coordinate with local lenders, and navigate regional filings quickly. They know the timing, tone, and format local agencies expect, something a national firm can't always replicate. This local knowledge saves time, lowers audit risk, and gives you confidence that your models match how Texas actually taxes property. Real examples that prove the point. A Houston investor with 3 commercial rentals found $80,000 in overassessed property taxes after an appeal handled by their advisor. Another client accelerated depreciation through a cost segregation study, freeing $300,000 in early deductions, cash they reinvested into their next deal. These aren't rare wins. They're the result of proactive, documented quarterly tax management, the kind GavTax delivers every day. Visit GavTax.com, your trusted Houston partner for real estate tax strategy, property appeals, and 1031 exchange guidance. Schedule a consultation today and protect your next deal before the IRS or the assessor takes more than their share. Because at GavTax, we don't just plan taxes, we protect performance. See you in the next video.